Hi everyone, welcome to I Thrive Ideas. With the holiday season in full swing, this also means the season of giving is officially here. According to recent research, 30% of annual giving occurs in December and 10% occurs in the last 3 days of the year. On top of that, 2017 saw an increase in giving of 5% as Americans gave $410 billion to charities last year. With the passing of the Tax Cuts and Jobs Act, the standard deduction nearly doubled and is now $12,000 for single taxpayers and $24,000 for those married filing jointly. This eliminated the need for most people to itemize their deductions. In fact, a recent study shows that 9 in 10 people will now use the standard deduction due to the new tax law. This is important because typically the tax benefits of making gifts to charity are only received if the taxpayer itemizes their deductions. Even with the tax law change, there are still some tax-advantaged ways to make your charitable gifts. First, you can make a qualified charitable distribution from your IRA. This is a direct transfer of funds from your IRA to a qualified charity. These are only available to those who are over age 70 and a half, who must take RMDs from their IRAs. A qualified charitable distribution is not subject to income taxes like a regular distribution and can be used to satisfy your RMD. Another tax-advantaged way to give to charity is to gift shares of highly appreciated stock with a low cost basis. Often, people will sell stock to raise cash to make a charitable gift. By doing this, they will incur capital gains which they will owe taxes on. Instead of incurring this tax liability, donors can give the stock to a qualified charity of their choice who can then sell the stock. Don't worry, the charity will not bear your tax burden, as qualified charities are tax-exempt entities. If you are more charitably inclined, consider setting up a donor-advised fund. This type of vehicle is established for donors to contribute to and then make grants to qualified charities over time. A big benefit of a donor-advised fund is your money can be invested and grow tax-free while you are deciding on which charities to support. Also, if you do itemize your deductions, all contributions to the donor-advised fund are fully deductible in the year they are made. If you have any questions about your charitable donations or wish to discuss setting up a gifting plan, don't hesitate to reach out to a certified financial planner at Thrive. Merry Christmas and Happy Holidays.